Hi everybody, welcome to Coffee Break Accounting, hosted by me, Becky Brooksbank. So I hope that you've all grabbed a cup of coffee, tea, whichever is your favourite, and you're sat ready to enjoy our first episode of the jargon-free accountancy session to help you understand your business numbers and get to know your business better. So Coffee Break Accounting is designed to give you 10 minutes or so, quick snippets into the behind the numbers of your business and hopefully give you some takeaway action tips at the end so that you can understand your business better. So make sure you're settled in, cup of coffee in hand. If not, press pause, go and grab one and come back and try again. So series 1 is everything to do with the profit and loss account. Okay, so we're going to kickstart this by having episode 1 talking about sales. So sales have a number of different names. You've got sales, you've got turnover, income. It's all different names for the same thing. Okay, you'll find that I'll use all the terms as we go through, interchange them around. I don't have a preference for whichever one, so you'll see that I'll use them in all different ways. So sales are one of the easiest concepts for you to understand about your business. It's the good bit, it's the bit that comes in at the from your customers. It's the bit every business owner gets excited about, okay? I can guarantee that if you got your hands on a competitor's set of financials, the first number you would go to is to look at their turnover, okay? Guarantee. I'd do that. I could also guarantee that the first number that you will calculate each month in your business books and be excited about seeing is your sales, your revenue, your turnover, okay? You'll go straight to that number if you're using accounting software or anything. Scroll across, what are my sales for the month, okay? The second thing you'll look at is profits, and we're going to come back to that in a couple of episodes' time because we'll discuss profits. So the first thing I can guarantee you want to know about is your sales. Okay. So have a think. What was your first sale that you ever did under your business? I remember mine. So that first, I was so proud the day that I actually managed to raise my first sales invoice that wasn't just free of charge because I'm helping out somebody. It was an invoice that I raised for some systems documentation work that I'd been doing. And it was just a monumental moment in business to finally have all that hard work cemented by having a sales invoice behind it. Okay, I still nowadays don't take for granted the fact that I'm raising a sales invoice and that actually customers have come to me and we're spending time and we're using each other to do work together. I still think it's a great thing. So I wonder if you can remember yours. Interesting to think back, however many months or years it may be, to remember that first sale that you had. So I'm going to introduce you now to John Tapp, okay? Sadly, I forgot to bring my little picture of John Tapp today, but John Tapp is a plumber, okay? He's our imaginary case study that we're going to use throughout Coffee Break Accounting to help us put into focus and understanding some of the concepts that we're talking about, okay? So John Tapp is a self-employed plumber. That's what he does, okay? He, like you, has all the day-to-day business challenges. He's got his books to sort out, he's got his tax returns to do, etc., etc. Okay, so today John is sat down and he's thinking about his profit and loss account, and he's thinking about his sales. So let's think, if we were a plumbing business, what type of revenues might we generate? Okay, I'll give you a pause just to think about that. Okay, so first things first, John might install bathrooms. A really simple job that a plumber might do. He might fix some taps, he might fit kitchens, and he might service boilers. Okay, all different revenue streams that John might have as part of his business. Now, John is a service-based business, okay? So he's providing a service. He's providing his expertise as a plumber to the end user, okay? Some of you might be product-based businesses. i.e. you're selling product to the end user. So you might sell socks, webcams, chairs, tables, you name it, okay? Just picking up a few random Becky thoughts there of what you might sell in your product-based business. So shops, online retailers, anything like that are great product-based businesses, okay? So whatever you sell, whether it be a service or a product, you'd recognise the sale in the same way. It's that top number in the profit and loss. I keep saying it, I've got an imaginary profit and loss coming down my mind at the moment, and we're going to create one together in a minute. Okay. So sales, the positive number at the top of your profit and loss account. I promised we'd stay jargon free, so I'm going to introduce to you one little bit of jargon for the accounting world, okay? We're looking at cash basis. So in everything that we do in coffee break accounting, we'll be looking at the transactions based on a cash basis. This means that we're going to recognise them in our books at the point the cash happens, is paid out or received in. Okay, this is applicable for micro businesses. So all of those businesses that have a turnover of less than 150 grand will be able to use the cash basis in what they're doing and how they're representing their books. If you're not a cash-based business and you're over this threshold or choose to recognise, do your books in a different way, you're an accruals-based business. Okay, so if we take John as an example, he has been and installed a bathroom, he's gone home, he's raised an invoice, which is due for final payment, and the customer will pay in 3 days' time. In the cash basis, John wouldn't recognise that sale in his books until the point the customer paid in 3 days' time. However, if it's under the accruals basis, he would show that in his books today because he's raised a sales invoice. Okay, they're the slight differences. Keeping it simple, really simple example of how John, if he was going to do it under cash or accruals, would do it. We're going to stick to cash, okay? We're going to keep on a cash basis. So now I'd like to have a think about our profit and loss account. So I'm starting to set up here, a template for John's profit and loss account. And everything that John does is going to be in pounds. So I'm going to start off. It's important to remember that. I'm going to assume that everybody I'm dealing with here today is working in pounds, but might be some of you that buy in dollars and euros. So at some point we can get more technical and talk about that, but we're on the basics today. Okay. So we are going to think about John's different sales that he might have. And we mentioned that he fitted kitchens, fixed leaky taps. We said that he serviced boilers, and I've also forgotten, and he installed bathrooms. Okay, so all of these are John's different types, and we're going to assume that in one financial year, John earned himself £50,000. John's doing well for his first financial year, and he's going to recognise this in here. Now, fitting taps doesn't earn quite as much, so he's going to service some boilers, which earns him a lot more. And then finally, he is going to install bathrooms. And we're going to add these up and check that John does indeed earn £50,000. Okay, so these are John's total sales. Okay, so all John is doing here is simply recognising in Excel his sales, and he's split it for the different categories. Okay, now it might not be, dependent on your type of business, useful for you to split the sales down, but it might be. Okay, so you might want to use the data for analysing whether you're doing well or whether you're doing not so well in certain areas. So John will be able to monitor this and be able to see what percentage of his sales he's done from fitted kitchens or installing bathrooms. If he has a decrease in bathrooms, for example, he might want to do an offer to boost that side of the sales. So how far and how detailed you get in analysing your sales is just dependent on what information you want to use it for. If you don't really want to know any more than just your total sales, just have total sales. But if it's going to give you more information, split it down and keep an eye on, and then you can monitor the different revenue streams that you have for your business. Okay. Now, things happen. From time to time, you might want to give a discount, or in the case of John, sadly, Mrs. Brown's had a leak from a shower that caused her some issues to the ceiling below. John, as a goodwill gesture, decided to offer her a £250 goodwill refund as a goodwill gesture, just to help her fix her ceiling and everything else after the leak. He did help her fix the leak. So it's important to remember that the total sales that we've got here are the gross sales, so they're before we've deducted anything. Discounts are really important to show in your sales, and also if you've had any credit notes where you've had to refund somebody for something. Okay, so we are going to put in here, change this to total sales before credits and discounts, and then we're going to take out some discounts and some refunds. Okay. And in this instance, John hasn't given any discounts. He's a service-based business, so he decides not to discount his products. But he has given a refund to Mrs. Brown. So in that financial year, he will also have taken that into account. So we'll put in total discounts and refunds given. So that means John's total net sales for the year, that is that. Bear with me. Okay, so John's total net sales for the year become that. Okay. So his gross sales with this level up here, okay, and his net sales become the one after discounts and refunds. I always recommend that my clients split out the levels of credits and refunds and level of discounts so that they can track the amounts they've been given. It's very easy to keep giving discounts to clients, particularly when you're new in business and you're trying to start drumming up some business. And sometimes if you don't recognise when you lump it all together in gross sales, what you don't see is whether you're over discounting or your level of credits are too high. And you might feel it, but you can't see it, and the numbers never lie. So by having the numbers split out, it helps to give you more of an understanding about your numbers, the levels of discounts you're offering, the levels of refunds, credits, anything like that, and also a split on your sales. So John now has simply been able to produce the first step of his profit and loss account, which is his sales lines. He now knows that in a year he's made £49,750. So that brings us to the end of our session on sales. But I want you to have a think. I've got a takeaway task for you to do at home. Take a moment to go away and pause and think about your business. What sales might you have outlined? How would you categorise these in your business? And what discounts and refunds might or might not be applicable for you? Okay, so your takeaway home task is to see, if you don't already do it, if you can generate a profit and loss like John's here. So having your sales at the top here, and then having any discounts and refunds so that you can come back down to your total net sales line at the bottom, like John. Okay. So, end of the first session. Thank you for joining me for our weekly instalment of Coffee Break Accounting. Next week's episode is going to be Series 1, Episode 2. So we're sticking with the profit and loss account, and we will be looking at direct costs in your business. So tune in. If you aren't already following Coffee Break Accounting, go and find my sign up button and it'll be delivered direct into your inbox every week. Or alternatively, follow me on LinkedIn or find me on Facebook at Charworth Associates, and you'll be able to see the video links there once every Wednesday. So thank you for joining me. Look forward to the next instalment of Coffee Break Accounting. Thanks. Bye.